How we get on, people? Luke here from LAGFX. We are back today with a new Sunday sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week, and we break down some of the analysis we have performed to give you guys a better understanding on how we are looking at tackling these markets. If you guys have any questions with regards to the analysis I go through in today's video, please leave them down in the comments below. And if you do enjoy, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. Now, without further ado, let's jump straight into today's Sunday sessions video. So the first pair I want to touch base on in today's video is the US dollar Swiss franc. This is a pair that we have taken part in as of recently, and we have profited very well from. We expected a turnaround in price. Price had been trading us bearish for some time, which tells us that there was weakness in the US dollar. However, as of recently, we have had a shift in the supply and demand balance. Demand has taken over, essentially, and strength has built up in terms of the US dollar currency. Now, this is evident to see because we have had a break of structure to the upside, as you can see here. The reason why this is considered a break of structure to the upside is because this high here was the last protected high within this bearish swing. Now, when we have a break in structure, it tells us two things. One, that the current trend is coming to an end. And secondly, a new trend is starting. So what's obviously happened is price has traded down. It's picked up demand from this liquidity sweep, which has given us a flip in the balance, meaning demand is now overpowering the supply in the market. We have confirmation of this via the break of structure, which tells us we should now, as a result, be following the laws of bullishness, which, as we know, provide us with higher highs and higher lows. This is exactly what we've been delivered with. We have a low set, followed by a high, followed by a higher low, followed by a higher high. Now, in order for us to take part in this market, we need to see price correct itself to trade into an area of demand, for demand to be introduced, and for that to initiate a new impulsive wave to the upside. So as you can see here, what I've gone ahead and done is marked out a valid area of interest. Now, if we zoom in slightly, you can see that what I've marked out is actually a wick to the upside, like so, followed by a wick to the downside. Now, what this tells us is that on the smaller time frames, we have bearish structure. Now, the reason why this is important is because within this bullish impulsive wave, there are sell orders that have been left unmitigated within this area. So once price trades down and into this, there's a few things that are going to take place. One, any supply that has been introduced from this bearish corrective wave, those orders are going to be removed from the market. What's also going to happen is the sell orders that have been left here, they are also going to be removed from the market. Now, if you look at supply and demand as a weighing scale, okay, as a balance, if we are removing supply from the market, what that automatically does is strengthen the demand. Now, what also happens is smart money traders like ourselves, institutions, banks, corporate companies, hedge funds, they look for areas like this to buy in at. Why? Because they understand that the supply that's being introduced in this bearish corrective wave is being removed from the market. The sell orders that have been left here unmitigated are being removed from the market. And they also understand that people are going to buy in from this point. Why? Because price is cheaper, and this is a key footprint for a potential reversal. So if supply has been removed, demand is being introduced, it's only inevitable that price is going to flip to the upside. So this area right here is extremely valid, and I am looking to get involved in buy positions from this zone. It's just a case of waiting patiently for price to trade in, for us to be delivered with confirmation of a reversal, and then that's when we would look to take part. So what does confirmation look like for us? Well, confirmation will come once price trades down and into this zone. And what we want to see is another break of structure to the upside. Why? Because that tells us that enough demand has been introduced to conclude this bearish corrective wave and start the new impulsive wave that trades us higher. Because as we know, in bullish structure, we break highs and we protect lows. So this would be a key point to get involved in those buy positions from, simply because the low that gets created here should be protected with us following the laws of bullish structure, and price should go on to give us the structure we want. So a potential position this week on the US dollar Swiss franc may look something like this. I would set my take profit just below the last high that was created. Why? Because that almost guarantees that our take profit is achievable. Why? Because if we are following the laws of bullishness, like I said before, we break these highs to create higher highs and we protect the lows, right? So by setting our take profit just below this point, it almost guarantees it can be achieved because price in theory should go on to create a new higher high. Now this position here, we would walk away with a 1 to 5 RR, which means for every 1% we are risking in this position, we are looking at gaining back 5 times the amount. So this is a brilliant setup and something I am looking to take part in. It's just a case of waiting patiently, allowing price to play into our hands before we take part. But that right there, guys, is my analysis for the US dollar Swiss franc. Now heading over to the euro US dollar. You can see here that price is trading in the opposite direction with a longer term bias. And that's because now the US dollar is actually the quote currency rather than the base. Now what this tells us, again, is that we want to see strength in the US dollar, weakness in the euro, right? We want to see price continue to depreciate, trading us lower. And we want to see strength continue to build in the US dollar, hence the bullishness in the US dollar Swiss franc. So very similar to our previous analysis, I want to see price trade up and into this area of interest before trading us lower to create a new lower low. Now what you'll find is we have clear bearish structure, right? As you can see, by price trading up and into this area to then follow with a new impulsive wave to the downside, we have lower lows and lower highs. So again, I just want to see price trade in for price to break structure fractally to the downside to confirm an end to this bullish corrective wave and the start of the next impulsive wave trading us lower. Similar to the US dollar Swiss franc, I have marked out an area of interest. This is considered a hidden order block. Like the hidden order block on the US dollar Swiss franc, what we are looking at is the wicks that have been left over. Now where the US dollar Swiss franc, the wicks were to the opposite side, so it was a wick to the upside followed by a wick to the downside. This is a wick to the downside followed by a wick to the upside. Now what this tells us is that there is bullish orders or buy orders that have been left unmitigated here that need to be cleared before price can trade lower. So similar, but the opposite almost, we want to see all of these buy orders be closed, removed from the market. We also want to see these buy orders closed, removed from the market for those sell orders to be introduced. What that does is give us the flip we need in order to trade price lower. Now this obviously provides us with a slightly better, more lucrative return just because the swing that was printed out last time was a little bit longer. So we do walk away actually with a 1 to 8 RR. So for every 1% risked, we are looking at gaining back 8%. Amazing returns, amazing opportunity, and I'm very excited to get involved in this market this week. So again, it's just a case of being patient, waiting for price to trade into these areas, allowing price to give us entry confirmation before we take part. But that right there, guys, is my analysis for the Euro US dollar market. Now just finishing off with the XAU US dollar market. This is quite contradicting for the first time in a very long time, but I am wanting to see longer term bullish structure in this market, and reason being is because gold is a precious metal. It's something that will always hold value and will only appreciate over time. It's like buying properties or holding mainstream cryptocurrencies like Bitcoin. This is something that will appreciate over time and continue to increase in value. But I do want to see that same bearish structure being introduced this week to trade us down and into this market, into this area of interest before taking us higher. If for any reason price trades into this area but actually trades through it, that's absolutely fine. What we will do is we will just continue to look for short opportunities, because at this moment in time, price is trading us in a bearish way. It's very evident that price is trading in a bearish way. And ultimately, if we want to look for longer term buys, we should be waiting for a break of this high here, because that gives us the break of structure to tell us that this bearish correction has finished and the new impulsive wave is ready to take place. Now, this is obviously a much higher time frame scheme, but as you can see, price would be following the laws of bullishness, which is our overall bias for this market. We just need to wait for confirmation that the impulse is ready before we take part. But you can see here that price is really accumulating, it's consolidating within a range, which builds my bias and my thoughts that price is probably in prep to take that next move higher. Now, as I say, if price does go on to trade beneath this area of interest, it would be interesting to see whether or not price reacts to this area here. Now, understandably, we have had a penetration of this zone, which would essentially mean that these orders have been cleared, but we do often see sweeps of these zones, as there is usually a lot of liquidity within these areas. So for gold this week, I will be waiting patiently for price to deliver me with extra confirmation before I anticipate my next move. But I do want to see longer term bullishness, obviously, but it's just a case of waiting for the additional confirmation we need in order to take part in this market. Now, price could go on to really trade us lower, clearing all of this inefficient structure, trading into this pool of liquidity before taking us higher. That's absolutely a possibility, and it would still be following the laws of bullishness. So it's very important that we are patient, we take our time, and we don't apply pressure to get involved in the markets. Allow the markets to trade into our hands, deliver us with the right entry confirmation before we take part. So this is probably one of those markets that I will be holding off on just for the time being, just to wait for the right moment in order to really take part and tackle. But it will be very interesting to see how price plays out. But that right there, guys, is my XAU USD analysis, my gold analysis, and that's actually going to summarize this Sunday sessions video. I know it's been quite short and sweet, but I feel I've covered the three markets I'm really looking at this week in good detail. I provided you with some key zones and areas to look to take part in. It's now just about waiting for price to play out and pick the right moment to take part. Now, as I said at the start of the video, if you guys have enjoyed this analysis, if you've learned a thing or two from my strategy, or you found this helpful in any way, shape or form, please leave a like below. And if you have any questions at all with regards to the analysis I've gone through today, just leave a comment below as well. I'm very responsive with the comments that are left. I think it's important to ask questions. That's exactly how we learn. Now, I just want to say a massive thank you for watching, and I'll catch you all in our next Sunday Sessions video.